Okay, dear performance management student, let's discuss this question. Again, we have taken this question from the study hub and it's a 10 marks question. Read part A. Calculate the total profit of product D over its life. So actually we are facing a life cycle costing question. What happens in life cycle? That we first estimate the entire cost from day one till day last. Number one. Second, I need to know what is the entire revenue. From the entire revenue, I'll be deducting the entire cost, each and every cost from day one till day last. Means I'll be deducting whatever I'll be investing. I'll be deducting the variable cost. I'll be deducting a project or product specific fixed cost. I will in fact will also be deducting a dismantling cost if it is required. So basically, we will be estimating the revenue from day one till day last, and we'll be deducting the entire cost from day one till day last, and that will give you the total profit. This is what we need to calculate in part A. Calculate total profit. Let's see read the question. As COVID company has identified market for a new product D, for which the following estimated information is available. Sales revenue for the year X2, X3, X4, 6 million, 7 million, and 6 million respectively. No sales are expected after X4. Selling price, they have given us 10. Contribution to sale percentage. So contribution margin, we can very easily, contribution value, we can very easily calculate because CS ratio examiner has given us, which is 60%. Okay, fine. Product specific fixed cost is 2.5, 2.2, and 1.8. Capital investment is 4.5 at the start of X2. There is no residual value. December X4. Ignore taxation and time value of money. So simply, let's go for part A. And I've already taken the initial investment, outflow 4.5. I've written the revenue as well. Now we can very easily calculate the contribution. And contribution is simply 60% of your sale. Let's take this, multiply by 60%. And obviously the option of drag works. That will save our time. Here comes the contribution. Now let us deduct the fixed cost, and this is a specific fixed cost. Minus 2.5 in the first year, if I'm not wrong. Yeah, 2.5. Then we have got minus 2.2. Then we have minus 1.8. Now very easily we can calculate profit, but make sure when I'll be calculating the net cash flow, then you will be just deducting specific fixed cost from the contribution. Okay, net cash flows. So here obviously I'll take this. Here you have to be a bit cautious because you are not supposed to take revenue now, because logically contribution means from that revenue we have deducted the variable cost. So we'll take contribution minus the fixed cost. Basically contribution minus fixed cost gives us profit. So this is what you need to concentrate a bit. Okay, fine. Time value money is ignored. So now we can calculate the total profit very easily. Here comes the total profit of product D. Let me take here. Made a little. Okay, no. We'll take this plus. So the total profit is 0.4 million. Everything is in million. So the total profit over the life of product D is 0.4 million, part A. Okay, so now let's see the part B of this question. Calculate cost per unit of product D, which includes absorption of all the product specific costs over the life of the product. They need cost per unit of product D, including all the absorption of all product specific costs over the life of the product as well. If you look at the question, 60% is the contribution. The selling price is $10. The selling price is $10 and the contribution is 60%. It means the variable cost is 40%. If I take 40% of selling price, which is 10, so the variable cost per unit is 4. So as far as variable cost is concerned, no problem at all. Variable cost is 4 per unit. The main thing is we need to know the fixed cost per unit. So let's work on that. In how will you calculate? It's very simple. Part B, variable cost per unit. Just take the selling price is 10 and I'm taking 40% of that. Just a minute. Is equal to is missing. So the variable cost per unit is here. Now we need all the product specific cost per unit as well. So very easily we can calculate. Initial investment is 4.5 plus, of course, that also a product specific cost. Plus we have got a product specific fixed cost 2.5 in the first year, then 2.2, then we have 1.8. 11, but obviously this is 11 million. This is not per unit. We have to convert this into per unit. How to convert this 11 million product specific cost into per unit? We need total estimated units. How to calculate the total estimated units? Very easy. Very easily we can calculate. If you look at the question, they have given us a revenue of first year, which is 6 million, a revenue of the second year, which is 7 million, and revenue of the third year, which is 6 million. So if very easily I can calculate the total revenue divided by selling price per unit, which is 10. That will give us the total number of estimated units over the life of the product. So here comes the total revenue. Simply it is 6 plus 7 plus 6. Selling price per unit 11. Apologies. Selling price per unit is 10. So estimated units over the life 19 million divided by selling price, which is 10 per unit, it is 1.9 million. Now we have product specific cost absorption. Product specific cost is 11 million. Total number of units are 1.9. So here comes specific cost per unit. I'll take 11 divided by the units. So here comes cost per unit. All you need is take the variable cost plus specific cost per unit. So we are getting somewhere 9.789 or 9.79. That is your cost per unit. What we did, we just variable cost calculation of the variable cost per unit is very easy in this question because contribution is 60% means variable cost is 40%. If you take 40% of 10, it is 4. After that, what we did, we just took all the specific absorption cost means initial investment plus specific fixed cost. We added all of them and we got 11 million. So 11 million. After that, we needed the estimated units to convert that 11 million cost into per unit cost. How did we calculate total number of units? First, we calculated the total revenue, which is 19 million. How did I calculate 19 million? The revenue of first year 6, then it is 7, then 6. Total becomes 19 million divided by selling price, which is 10. So 19 million divided by 10 gives us total estimated units of product D over the life 1.9 million. 11 million divided by 1.9 actually give us the specific fixed cost per unit. Then simply we added the variable cost plus the specific cost that gives us the cost per unit for part B, which is 9.789 or take it like 9.79. So thank you very much for watching this lecture, and don't forget to avail the opportunity which Abil School of Accountancy is giving you, and it is the biggest opportunity. Such opportunities, they come rarely. Okay, they do not come so often. So I would say avail this opportunity. The opportunity is Abil School of Accountancy is offering a live free online crash course for June 2026 attempt for the PM. For more details, you should contact Abil School of Accountancy admin. They will help you, they will guide you, and the entire focus will be on your concept buildings. Plus, we'll be doing questions from the study hub. Thank you very much for watching this lecture.